Good morning, everyone, and thank you for joining us this morning to review the 2011 USDA Planting Intentions Report and to discuss the spring and summer outlook. My name is Tanya Tarpenter, and I am the Senior Marketing Manager for Electronic Grain Marketing with Pioneer and Farms Technology. And today we are privileged to have Duane Lowry with us to share his thoughts. And again, at the end of his presentation, we'll open the discussion for a Q&A session with him. A couple quick notes before we begin. All phone lines are muted during Duane's presentation, but feel free to ask any questions during the presentation by entering them into the question dialog box in the upper right-hand corner of your screen. And I'm going to collect those questions and read them to Duane at the end of his presentation for our Q&A session. For those of you who may not know Duane's background, he has been involved in the commodity market since 1978. His experiences include cash grain merchandiser, brokerage, and a Chicago Board of Trade member, and a floor trader. Duane is actively engaged in markets on a daily basis. He provides written and audio commentary in several venues and provides consulting services to farm producers and professional traders. So Duane grew up in a diversified family farming operation in Iowa, which provides a foundational perspective to markets and how their price swings will impact agriculture producers. Duane's analysis is heavily influenced by a trader's mentality that has developed with more than 30 years of experience. He recognizes the significant influence emotions have on market participants and thus markets themselves, but he strives to look beyond the daily sound bites, minimize emotional reactions, and focus on outlook-styled commentary rather than recap commentary. So thank you again, Duane, for sharing your thoughts with us today. Sharing your thoughts with us today. So with that, I will turn it over to you, Duane.
All right, thank you, Tanya. I wish to thank everybody for the opportunity to present here today. I also like to thank everyone for taking their time from their busy schedule to join us. I know most of you have joined us through the power of a webinar, but and you can see what is on my computer screen. However, I also know some of you may be listening by phone only. When necessary, I will attempt to describe the computer content for those listening by phone. The first thing I wish to say this morning is that we live in very volatile times where instant communication escalates the intensity of reactions and market volatility regularly reflects the emotion-filled environment we must all navigate with our decision process. It's not easy. While today's news focus is all about yesterday's acreage and stocks data, we will quickly find new inputs that capture the market's focus and possibly something as unexpected as earthquakes or nuclear accidents. We just never know. But we do know that in today's soundbite society, markets seem to have very short attention spans. With that in mind, most of today's presentation will attempt to look into the future and discuss what may be ahead. Obviously, nobody knows exactly what the future holds, but the exercise of pondering does have a very beneficial effect on our ability to prioritize that which we do know about present conditions. Basically, by seriously pondering the range of future possibilities, we develop new respect and new appreciation for our present opportunities. Sometimes it's difficult to recognize opportunities until they're gone, and we want to try to put ourselves in a frame of mind where we can recognize them when they exist. Before you can look objectively into the future, you first must have a grounded view of the present. In that spirit, let's review the key highlights of yesterday's report data. As soon as I can figure out how to make this work. Bear with me a minute. Here we go. I've got a slide up here that basically gives a summary of the March 31st data. Yesterday's acreage data offered little significant deviation from trader expectations that have been basically lingering for the past several weeks, if not the entire winter period. However, as price relationships change and the calendar turns to allow the weather the opportunity to influence acreage decisions, it may be that we experience more volatility and uncertainty about the final acreage mix during the next 60 days than we saw during the previous 2 months. The 2011 corn acreage seems capable of rising further due to the corn and soy profit ratios at current prices. So while yesterday they pegged it at 92.2, which is up 4 million from last year, the price reaction and the framework of people's minds sets the conditions right to increase those acres in later reports. The soybean acreage seems likely to decline from yesterday's projections for the same reasons. You know, for every 10 cents that corn increases in price, you got to go up 35 cents in soybeans to maintain the same net profit ratio as you had before. So beans up, or corn up 30 cents yesterday, it's up another 30 or another 10 cents in new crop, 40 cents. You're talking about having to have soybeans go up $1.40 just to make the net revenue for your average Midwest producer remain the same. So at the present time, the market is sending the signal that we need more corn acres. Whether we agree with that or not is another story. Wheat acreage and stocks are abundant. Global stocks are expected to build. It is difficult to justify any wheat price strength potential, and wheat may actually be a drag on corn prices rather than corn prices lifting wheat prices. Consequently, short-term post-report wheat strength here needs to probably be viewed as a selling opportunity. The acreage figures were not significantly different and from expectations, but it was the stocks report that was significantly a surprise to everybody. And the carry-in impact on the new crop balance sheet is what got the markets most excited here yesterday. While both corn and soybean stocks were well below expectations, historically it is wrong to assume this will translate into an equal reduction in U.S. carryout projections. That said, we are dealing with tight old crop balance sheets. If the smaller than expected corn stocks figure is due to an overstatement of the 2010 crop and not due to more aggressive feeding rates, then near-term bullish excitement will overestimate the demand projections for the remainder of the marketing year, which may well mean future stocks reports will come in above expectations. And I think that's probably what we should have in the back of our mind as we look forward here. Consequently, this entire storyline may not have much potential to build any meaningful upside energy in old crop months beyond the price peaks established in February, which at that time I labeled as defining a price ceiling, and I continue to believe that is and will remain an appropriate label. Bullish arguments from here forward are going to require summer production problems. They're not to build upon the overnight gains, upon the price levels in old crop markets that were attained several weeks ago. In order to build upon that, you're going to have to get a summer weather problem. I don't believe you're going to get it based off yesterday's data by itself. The marketplace is going to continue to add what if premium. Whether that translates in higher and extending higher prices, or whether it just means more and more buying energy being absorbed at current prices, you know, we'll have to find out. There's a few other highlights that I want to talk about here too. The 2011 acreage of corn, soybeans, wheat, cotton, and hay were up 8 million from last year. The corn-soy acreage mix was up 3 million from last year. The bullish stocks data suggests, in my opinion, that both last year's corn and soybean production was overstated as opposed to it being a more aggressive consumption story. But there again, that remains to be seen. The trendline yield, which basically is about 163, that type of corn yield will still result, if we have that type of corn yield this year, 2011, we're still going to result in an extremely tight carryout of 600 million, and some people would argue less, maybe, you know, by a notable amount. But we don't really know that. You know, global wheat stocks are going to rebound versus last year. Wheat is going to get itself priced to compete against corn as a feed grain. It's very possible that we're going to see some reduction in U.S. corn export demand for this next marketing year. It's also possible that we're going to see profit margins squeezed in the ethanol industry, but we'll touch on that a little bit later. But there's a lot of things that come into play here, but if you just take things at face value, even a trend line yield results in a very tight carryout situation for the next marketing year. Recent history and profitability with current corn and soy prices suggests we should expect higher final corn acreage. I talked about that already. I think it's also important to remember and put things in perspective here. We have ample global soybean stocks. We also have people that feel that China's U.S. soybean imports from here forward could prove to be disappointing in the months ahead, part of that due to plentiful supplies from South America and the global pricing structure likely to get into a position that we tend to defer some shipments out of the U.S., switch them to South America. So we might see some disappointment that could impact our balance sheet on U.S. bean exports to China. I think it's very interesting. It takes a very optimistic national 2011 soybean yield, and yet we still would have a very tight balance sheet. It seems amazing to me that the soybean market wasn't more aggressive yesterday, and it seems even more amazing that the soybean market was lower in the overnight trade. At the present time, I'm not sure what we should read into that, but I think it's certainly a caution flag that needs to be remembered over the next several days and see how things evolve. With the current price relationship, with the recent price action this post-report period, with the trader sentiment so bullish corn, with farmers having a tendency to lean towards corn acreage more and more every year, it seems like, versus soybeans, I think we must anticipate the final soybean acreage figure declining from yesterday's figures, with the possible exception if something comes along in weather to cause that to influence the acreage mix. The U.S. wheat carryout is going to be abundant. Global stocks are going to increase. I just don't think we have a storyline there.